Hi, Dan. It's Trevor.
Morning, Trevor.
Hi.
Can you hear me?
I can. Can you hear me?
Yes, I can. 1 second. I'll just make you the presenter. 1 second. Presenter. Yes. Okay, you should be able to show your screen now. Yeah, we're looking at Euro USD weekly.
All right. Off we go.
Off we go. Okay, then. So I think it's 9 o'clock, isn't it? We think we can get started. Hello, everyone, and welcome to another technical analysis webinar with Trevor Neil. Thank you for joining us. As always, we'll aim to get through everything in approximately 30 minutes, but we practically never make that target. We'll always spill over by a few minutes. If you have any questions for Trevor, you can ask them in the questions tab of your GoToWebinar control panel, and I'll pass those on to him. We'd like to remind you that this webinar will be posted to our YouTube channel in a couple of hours' time. So if you'd like to watch it again, or you'd like to watch a specific piece again, please go to our YouTube channel, and we'd love it if you subscribe and also hit the bell to get notified. The webinar handouts can be downloaded from the handouts tab of the GoToWebinar control panel. If you're having problems locating them, please let me know in the questions tab, and I'll send you a link. The first handout is a guide to the different technical terms and indicators that Trevor uses. And the second is a CFD guide, which explains the different products that we offer at FX Choice. If you're watching this on YouTube, all of these handouts are available in the little description box below the video. For those of you who don't know who Trevor, I'm sure you all do by now though, he has over 40 years experience as a technical analyst and trader, and was global head of technical analysis at Bloomberg. So we're in experienced hands. Trevor, without further ado, over to you.
Okay, morning everybody, welcome. Right, so let's start. We will go through the currencies, cryptocurrencies, the commodities, that is, I'm planning to do gold and crude oil, and then onto the stock indices. If there's anything that you want me to cover, if you've got any questions at all, please send them in the chat box, as Dan said, and he will interrupt me, and I will answer the questions. And I don't mind the interruption. In fact, I like the questions. So please ask questions as we go. So let's start to set the tone. We've got this dollar weakness that we've had over the last few weeks. Has come down. This is in the euro. Euro being the biggest currency against the US dollar, into this big area of support that we had given a cigar to previously. We had also noticed, which was a good warning for us, the bearish divergence in the weekly chart, the high, the higher high, the high, the lower high, which appeared on both the RSI and the MACD. So we were ready for it running this move that had lasted for all of 2020 to have a temporary halt. Now going to the daily chart. So here is that fall there. Now in the shorter term, we've rallied during last week against the now downtrend in the euro, and we've hit a small area of resistance here, given it a cigar here, and it stalled, I think, from there. The RSI had gone up in above the 65%. For me, that's the top zone there, and now turned down from there, indicating it is stalling at that level. The MACD is, however, bullish, but this is a good place for the euro to turn down again and to break and maybe go on to make a new low, breaking this low of the start of the month. Zigzagging down, zigzag, zigzag, zig could be starting right here at the beginning of Monday. So watch out for that. Moving to sterling now. Sterling too has declined against that strong dollar. We've zigzagged our way lower on that. Again, let's look at the weekly chart here. We had that big break, and now we're pulling back against the trend there. But we've still got an intact, I think, longer term uptrend. We're coming back to the cigar of support here. This zone in here between 134 and 138, let's call it that, but exactly where we are now. Also, we've got the low of the end of last month that we're testing now with some shadows behaving sort of fairly well at that level. And I've circled the RSI has come down, corrected down to the 35% reading, and turned up from there. Now it's a bit early to say that the low is in place, but it's a good place for it to stop if it's going to stop, and then rally up and probably fail at a lower high than here at 139, and continue the zigzagging pattern down unless we've come to the end of the dollar move, but the dollar will dominate that. One thing which I had been very keen on was the sterling versus the euro, and we had a big breakdown actually from more or less this time last week. We were at trading up at this high here, and then almost immediately it fell down. So let's get the context of that. We had been talking about, as we were talking with this as the last candle, we could see that we were moving into an area of increasing resistance, this double top formation, these previous important highs here at 120, that round number, two highs, and I said the progress from here will be more difficult. Well, it was a bit more profound than that. It was a sharp reversal last week, and down we tumbled to 115, which is the first area of support on the long-term basis that so far we have stopped at. So remember that is from the summer of 2020 level there. We're back there. So on the daily chart, we've come back, and so what is the behavior here? Well, in the short term, actually, the RSI went down hard, so big correction took place, and then it's turned up and come up through 35 from below here. So swing traders might be looking if there's any more follow through today or tomorrow on this to get bullish of this with protection below the low of last week at below the low of last week, let's say there. But you need to be very precise about that level and the stop placement itself. So I think that given the long-term nature of this and still the rising lows pattern more or less intact, this one was broken, but more or less intact, that this should eventually resolve itself to the upside. But this could be an opportunity, but you would know quickly if it had failed. A low 114, let's say 92, something like that would be the place. And then I would also like to show you the RRG chart, the relative rotation graph, just to show you what has happened to the currencies. Everything in the currency, G10 currencies, is now to the left of the vertical here. That means the dollar is stronger than everything else there. The one that's closest is the Canadian dollar. It was stronger. We liked that for that time, but it's lost that power now. Really, it's the dollar and then everything versus it. New Zealand dollar is furthest to the left, so the weakest. There, Australian dollar too, the yen, there, Canadian dollar, Swiss franc coming up, the pound coming up, the Nokia moving up as well. But notice the direction of every single one of these. They're all heading northeast. Okay, they're underperforming, but they're increasing in relative performance with positive momentum. So they are getting better. And in the weeks ahead, if this pattern continues, we could be seeing some weakening of the dollar versus the other currencies. Not happened yet. The dollar is the strongest of the currencies. So I'm going back here now. Let's look at that.
Trevor, can I stop you for a second, please?
Sure.
We've got a question, and whilst we're on the GBP, because it's we've got a request to take a look at the JBP Japanese yen chart. And the asker is a DC, so I don't have a full name, but they're asking a downtrend reversal. So
on the GBP,
yes, Japanese yen.
Okay, so I'm going to put it in.
I know you weren't planning to show that.
No, but it's okay. It just sometimes it takes a moment to load in the data from the cache. And there it is. Ah, there we are. It did it nice and quickly. So the first thing I'm going to do is look at the weekly here. Now that's wrong. GDP. Okay, now that's right. Okay, so this is the weekly chart of it here, and I want to bring in here because we're at an important level here. So I know it's very, very big picture and all that, but we've moved up through this multi-year range, 2016 till now, moved up very impressively in it. The key level to break is 155. We do get, I would award this a cigar in here because we had a consolidation which lasted for 6 months in here. So that's going to be, hard to push through, but then this area here will be easy to push through, but it is impressive. The MACD is positive. Now, the RSI, weekly RSI has turned down. I won't call it a sell signal because it's in the context of a strong bull market, but a weakening signal, that's what it said. We're at the previous high here. It's very normal. Back to the daily chart here.
This euro we're looking at.
Yeah. Okay. So we pull back here during the week off this sell signal, if you like. But I don't like to call this a sell signal because it's in the context of a bull run. Although I do notice that it was also a bearish divergence. There. High, 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 lower high. So I do take notice of a bearish signal from the RSI when it's accompanied with a bearish divergence. So that, yes, it was an important signal. We've come back, corrected, we've gone down below 35 and now turned up very mildly, keeping the rising lows pattern intact. And so because of, and let me just make sure it doesn't change, the nature of this run here being so strong, that I favor this to be a correction only in the market. Yes, we did have a weak move to new highs in the beginning of the month, but I think it's correcting that now, and could be turning up from here. The strategy, of course, would be to see the first sign of good strength. That would be something like a positive candle, a nice big bodied white candle there, giving the implication that the low is in place, and then we've got a very clear place to place us to protective stop below that pivot low. So I think that if you are asking my opinion on this, I think that this is a correction which may be completing. That's it. Looks very likely is completing the correction. Okay. I'll go on to the
yes, thanks for that, Trevor. I hope that answers the question.
Okay, and here we've got the weekly of the Norwegian, and well, this has been, the dollar's been going down here. Now it's flattened out here, and just see where it is here. It's a very important level, holding below there, 1.87 level, and then on the daily chart, we've got this flat area here and a very defined range here, 8.7 at the top, and at these lows here, I would say the 8.5 low here, defining that whole range. And we just visited the lower end of it, starting to turn up. I think that range is going to break out in a very significant way, and that is going to become a good trade, an important trade. So I'm watching this very closely. It's a narrow and defined range, and I think that this could take on its role again as a pivotal currency. So I'm watching that. Okay, I think I want to get on to cryptocurrencies. If everybody's happy with the currencies versus the dollar. Here, let's go to the RRG to get the contacts. And those of you that were here last week will remember that we had showing more or less in this position here, we had Bitcoin, and then over here we had Litecoin and Ethereum. But quite early in the week, so this is Friday, Thursday, Wednesday, we quickly turned around that Ethereum overtook Bitcoin, which turned back on itself here, and Litecoin came around hard too, both of them making new highs powerfully here and surging. And so if you only participate in one of the cryptocurrencies, all three now are outperforming the dollar. So that you're better in any of those three than the dollar itself. And also it's now Ethereum. Quickly, Ethereum took over from Bitcoin as the leader, and Litecoin too, and a big swing catch-up move. And so if you were moving around the currencies, you should have already quite early last week have got yourself into Ethereum and moved your assets out of Bitcoin. Nothing wrong with Bitcoin. It's also doing well. But if you want most potency for your money by being in the right thing as opposed to anything, then Ethereum is the right thing at the moment. So let's start with Ethereum, the right thing. So here we've got Ethereum making its new high here, another new high this morning. Trend is up, higher lows pattern. Won't bother showing you the weekly chart because it's very powerfully bullish. All the moving averages are pointing upwards. The Bollinger Bands are both moving up here. The RSI, which had given us a little brief correction here, but it was never really a sell signal because it was in the context of the bull run. But it's now the RSI is very strong again. The MACD never crossed, and it's upwards too. So all this area here now of around 2000, just over 2000, 2050 is an area of support for it now. This high, and this consolidation here is all support for it, and it should continue on strong. And I wouldn't be surprised if it gain more momentum. Here's Litecoin, which has swung round as well. We picked this one up, was very treacherous. Last week it burst through this downtrend line that we'd drawn here, and noticing this triangle, but then reversed viciously immediately after that, and that probably would have caught a lot of traders out. And then now during the week pushed up, and then now it's making new highs. Not it had an intraday high on Friday, but it's moving up, and it's above this important February high here, looking very strong, looking very good. RSI is pointing in the right direction. MACD is pointing in the right direction. Trend is strengthening. It is looking good with support at 240 area. Let's call it that. And then Bitcoin itself is not looking quite so good, is it? Really, it's struggling to make the new high. I'm not saying it's not going to make the new high, but it's not made a new high, unlike the other two, who've now got the gold stars, if you like. So it's struggling a little bit, but it is bullish, and I don't think this high is actually the 61,700 high is going to end up being a big resistance for it. And it's just a matter of time. But if you want to get maximum bang for your buck, it's Ethereum first, Litecoin second, Bitcoin third, and it has yet to make a new high. But I think it will make a new high. Now, a bit to say on gold here, because I've been relentlessly bearish of gold, and it has been going down, and I've not been a friend of gold at all during the latter part of 2020, but now I think the situation is changing. We have come back to which I warned you was, this area here was very easy to pass through, and but now we've come to the big area of support, $1,700 to $1,750. Let's broadly call it there. It's got a cigar, and that's forming a consolidation here now. The RSI has corrected substantially. We haven't been seeing readings like this since the 2018 low here in the RSI. The MACD is still negative, but starting to move closer together. So there's a bit of hope here that at this consolidation and also that high there and the action that we're seeing now on the daily chart, that we're beginning to stabilize here in a meaningful way. We made two lows around 1680 here, and we're testing the the break of it would make it properly a double bottom. So we've got two lows at the same price. That's not a double bottom. It's breaking the high in between the two lows, breaks the double bottom, and that would be at 1755. Well, we probed at it, but then has come back, so it hasn't broken yet. If it breaks 1755, we've got the double bottom in place, and that would take us as a target. We'd measure from the two lows to the high in between, and that would take us up to 1800, a big round number and an important level. The RSI is higher on the second low of what might be a double bottom, which is bullish. The MACD has turned bearish, and so I think this is quite likely to make that break. I think we're building up here at an area of long-term support. We're finding a chart pattern being formed, potentially a double bottom. I think that I'm hoping to see that in this week we will properly break the pullback high in between, and then make a move, quite a modest move up to 1800, but all in the context of still a declining market. But I think that you know, I'm not so bearish about gold at all now, and I'm not saying that you have to back this from the bearish side. I think it's now changing in nature, and this is a good place for it to do it. And we've got first signs, early signs of potentially a bottom, a much more important bottom forming. I want to show you something important here. This is gold versus the S&P. I show you this chart every once in a while, the important times. We talked about it here. We talked about it here. Here it held. Here it didn't hold, and this started that leg of great weakness in gold. But it's coming back now to support. This is gold divided by the US 500. So this is the outperformance or underperformance of gold. So this is gold underperforming the S&P. This is gold underperforming the S&P. Now it's coming back to this low here, which is a very important low, same low as 2007 low here, and it will be catastrophic if that breaks, really catastrophic. People will give up on gold and say, I don't even want a gold Rolex anymore. You know, gold's, I'd rather give me Google stock instead. That's what will happen at that point there. So it's threatening. It's a good place to hold if it's going to hold. It has held this time, it has held that time, and that's what followed, and that's what followed. But it's pretty threatening level here, so it's profound for gold itself. And then moving on to Brent crude oil. And so Brent crude oil, again, let me do the weekly, because we powered up to resistance, hit the resistance at $70. We knew that was there, and the market got an electric shock at $70 and now has backed off from it, and quite hard from it. The RSI has come down, crossed over the 65 level, but I think, and now the MACD has also crossed. And so from a weekly perspective, this is now turned bearish, actually bearish. And the inference being that we're once again having another one of these sort of, potentially these sort of moves here, either a consolidation or a major change in direction. And, you know, dare I say it, the bull market over for it. On the daily chart, it doesn't look as threatening as it does on the weekly chart. We're consolidating. We retraced 61.8 of this recent advance here, and we're moving very, very sideways. All last week, the candles were very, very neutral. Small bodies and small ranging candles, as neutral as you can get. The RSI has been declining since we had the small bearish divergence here, but it's declined and declined. A breakup through it would be bullish, for the market in the short term, and might mean that we would go back and retest the high. But at the moment, it's being guided lower by this downtrend line in the RSI. And so watch that for a message, but I think it is more threatening that it does go down further. I've got a minute. I haven't overrun yet, so I don't want to break my record of always overrunning.
Don't worry, Trevor.
This gives me an opportunity to show gold-silver ratio. Now this has broken up, and I showed you this before, but I just want to remind you this is gold divided by silver. Going down here was gold underperforming silver, but now gold has broken that downtrend line. I really think it has. The RSI has come up strongly. The MACD weekly is positive, and so I think we've had although having said what I've said about gold, we've got a structural change in the relationship of gold and silver. Okay, let's move on to the indices now, and the US 500. Well, really powering on again. Bearish divergence, yet another bearish divergence that has been negated. Just when you think they're always negated, you get one like this one, which wasn't. But now we've broken up through the bearish divergence line, so it is negated, and the MACD has turned positive. So the weekly chart is now extremely bullish again. Yeah, I don't need so much data on there, and that's a very powerful candle indeed. So on the daily chart, here's what it is. It's stretching ahead strongly. We had also a daily divergence, which is now broken up. Extend that line, so it's negated. The message of bearish divergence is negated. It's a strong message. The RSI is pointing upwards. It's high, yes. It's hard to maintain this. I wouldn't be surprised to see a pullback on it, but the MACD is positive, the RSI direction is positive too, and the RSI and the ADX is turning up as well. We've got support now from the old resistance at 4,000, I'm going to call it. That number there should support any pullback if we get it during the week, but the structure of this is very strong indeed. The one that I like even more, and we talked about last week, is actually the German 30, and we like this because it's got the advantage of the weak euro, and many of the constituents of the 30 are exporters and big beneficiaries of the weak currency, and so we're getting lead from the German market. So if you want to be long of one index only, and it's not necessarily the US 500 you should be long of. It's the German, I think, is better, the best of the majors at the moment. So we're stretching ahead strongly here. The MACD on the weekly is expanding beautifully. The RSI is still going up at a very strong reading, but this is this kind of behavior here, isn't it? And that was here in the market. We can go much further unless it hasn't turned down, it hasn't crossed through 65, even in the context of this very strong bullish pattern. On the daily chart, all the messages here are also strong. The MACD is positive, the RSI, yes, it's high. It's weakened off very slightly in the last few bars, but it's still strong. The message is strong in it. The Bollingers are both moving up. That's reflecting the rising price. The moving averages 20, 50, 200 20, 50, 200 are all splaying out, and the 20 is moving away from the 50 and away from the 200. Everything is bullish in this. The only problem with this is the advance has been so fast that if it has a correction, the support is quite weak. Really all the way right back down to 14,100. Now I don't think we're going to get down there, but if it starts to drop and drop hard, there isn't much to stop it before there. So watch out on this, but it is looking best. FTSE, the UK 100. Look at the weekly here. So we had this triangle. We broke out of the triangle last week powerfully. I think it's a nice break. MACD always stayed bullish throughout the triangle. That's good. The RSI is basically constructed, but we are worried about this big wide cigar here, multi-year resistance that we're coming into. It really it really starts at 7,000, more or less where we are now. So it wouldn't be surprising. Think of crude oil, what happened when it saw a very significant multi-year resistance like that. It's enough to stop any move. It'd be hard for the market to make its way through that. Here's the triangle that we broke out of. We broke out fairly powerful, had 3 nice sessions there, and then now we've weakened back a bit. This has given a sell signal, but inside the context of a bull run, and without bearish divergence in the RSI, so I would ignore that and look for it as a buy opportunity there. We've got in the shorter term chart, we've got better looking support at 16.8 and those sort of levels there. So it's bullish. It's the least bullish of the 3 that we just looked at. I like the German 30 most, although I feel it's a bit vulnerable. The US 500 is very strong, but a caution here is I hate to bring any fundamentals into this, but starting today and for about 2 weeks, it's earnings season, and we've got some big companies reporting. There's very high expectations for those companies, and so it's going to be very easy to disappoint the market for the results to come out well or really well, but the market was hoping that it would be exceptionally well, or something like that. You've seen this before, so it's vulnerable. I think we could see some increased volatility, some setbacks, some shocks, some disappointments, even with good numbers being interpreted by the market as disappointing. So I think that for me personally, I think we're in for a dangerous phase. We know historically this is a volatile phase, and it is technically in a position to express that volatility because it's shown the sentiment is so bullish in the market, and the confidence is so high. The VIX is at a really low level. People are sure the market is going up, and that makes them very vulnerable. And I read today that in the last 12 months, more stocks were bought than in the last 12 years. I mean, people in America and the world over are long to the hilt of this market, and with high expectations and discounting excellent news for the future. So it's very easy for the market to disappoint in this condition here. So mark my words, over the next 2 weeks, I think we'll see some volatility in that market, and I would rather be somewhere else during these 2 weeks. All right, I hope it's not disappointing, but I haven't overrun very much.
No, well done, Trevor. Thank you very much. Well, we did have a question, but the person who asked it seems to has disappeared. It seems to have gone offline, so I'm not sure if we can ask. Well, the question is this: which candle pattern is best to trade? So it's quite a broad question.
Yeah. Okay. Well, so it's the answer is there are about 40 candle patterns. They're not all as strong as each other. Some are stronger than others. The ones that are amongst the strongest are bullish engulfing, doji, but I mean there's a whole group of them that are strongest. And since the gentleman has left, I'm not going to spend a long time on that. It's I've done a webinar on it in the past if you want to look for that, and for not here, but hosted by Refinitiv, and where I've studied this quantitatively and thoroughly. So not just sort of guessing at the answer, but as a statistical research project, which was a big project, and so I can answer the question empirically, answer the question, but it's definitely worth noting they're not all the same, and also it's worth noting that I did this same test 5 years ago, and I thought it'd be a good idea to do it again to see whether in 5 years the results were different. starkly different or mildly different or not different. And why was this so important? Because something had happened in the last 5 years, and that was that algo trading had been invented. Now, many people say that candlestick charting or charting and things don't work as well as they used to because of the computers and the machines, but is that really true? Well, in a way, I have a way of testing that, because I tested before they were there, and I could do the same test again afterwards. And so have a look at that. It's a quant test, so there's no simple answer to it. But if you want a simple answer, the answer is that generally, as a general answer, they work just as well as they used to, and in some cases better. Okay, all right then.
Well,
but if
thank
you
you very much,
question,
Trevor.
don't leave.
Yes, I know. Yeah, he said the gentleman has left, unfortunately. Okay, well, thank you very much for attending, everyone. Please join us again at the same time next week, same place, of course. And don't forget that we'll be posting this webinar to our YouTube channel in an hour or so's time. So if you came later and you want to watch from the beginning, or you just like to watch the whole thing again or a piece again, head over to our channel and don't forget to subscribe and click the bell to get notified. So anything else to add, Trevor?
No, just watch out in the US stock market. It all seems comfortable at the moment, but it may change very soon. And since I have not overrun enough, one thing is, we've got many bull markets here, things going up, and maybe a little bit of weakness, in gold and silver and hesitancy in crude oil. But where is all this buying coming from? And it is institutional buying. And what you may not be aware of is there's a massive exodus from the interest rate bearing instruments. They've had a big shock there with the rise in rates in the US and the collapse, absolute collapse of bonds. It's probably not something that you do trade, but there's a lot of money in bonds, and the safety is usually considered to be a safe place. Well, actually, it isn't safe. And this has caused big portfolio readjustments, and the managers, the pension fund managers, the insurance companies, and that are really underperforming because they have not been heavily enough committed to the equity market, too heavily committed to bonds. And this is where the buying is coming from. It's a big structural portfolio adjustment. The old 60-40 portfolio that you learned when you're doing your CFAs and things like that has not worked for a long time, and this is the last straw for it. All right, my friends, thanks very much indeed. Thank you, Dan, for looking after us. Thanks for your patience, everybody.
No, thank you, Trevor.
Great week, and may the trend be with you.
Thank you very much, Trevor. Goodbye, everyone.
Yeah. Bye-bye. Thanks a lot.
Bye-bye.